So this is the financial template. You can see new land pathway integrated consult business plan financial template. We are going to be discussing now. We're going to be discussing all of the things you need to put. And I want to tell you something. This is all the write up in your business plan can be so fascinating. They can be so interesting. They can be so. They can wow your the business plan uh, panel or the panel set up to and look at your business plan. But I trust you and I bet you in every committee to set up there is someone who is a finance let's say it's a chartered accountant or an expert in finance, and this is where they pay more attention to. The bank does not want the how you go to the market. It doesn't concern them. What they want is the numbers. What they want is how is this business going to generate profit in such a way that it's going to pay back the money, whether it is going to be equity funding. If it's equity funding, they want to look at is this business going to be profitable for an investor. So it's going to be a loan. They are going to look at how will you finance your loan repayment. Vis-a-vis the money you are getting. So this is the front page. So we have the pre-operating expenses. So for every business, for instance, if you are starting up a business, you have your pre-operating expenses. That is the money using is securing the land registration. You want to fence your product, fence your land. Say you are in agriculture, you want to fence, you want to do a lot of things. Even in the manufacturing sector, you need to put all of this in place. So you can see it here. They are detailed. It's editable, so you can see me now. So you can look at this place where you have the price. This is 000. You can see, so it's already in thousand. So if you are going to write 1 million, for instance, it's going to be 100, so that it can tally with this. So whatever you are adding, so already put it there. So for someone who's using template to run billion, so you can have that. So you have this, the land, which is crucial, and so that's one of the major factors of production, land. So whether you're renting this space, you are actually purchasing it, it should be known in this pre-operating expenses. So you have it there. You have that. So it's well explanatory. The generator said, so let's say you have a miscellaneous equipment, your cost of land plus your building is going to be added here. So you have all of this here, the pre-operating expenses. So it's editable. So just put in your figures. You can add yours. You can see. You can add if you are good at using Excel. You can easily add. You can insert whatever. This particular one is tailored around someone who's going to broiler processing or chicken processing plant. So this person has the broiler processing line that is going to buy for 7 million, for instance, 700,000 for instance. So you have this, so you can see all that. So at the end of the day, your total capital expenditure is going to be this. That's about 40,300,000 naira. Did you get it now? So that is that. Then we go to the income statement. I'm making it short so that you can all get the major picture. So this is income statement. Is that's what I told you about 10-year plan, 10 years plan. Okay, great. So now in your income statement you have this, your product and your service one. So some business you have more than one product. It's allowed in any business plan. So you have, let's say you are doing cassava production, for instance. You are doing your local fufu, your gari, and you are doing high quality cassava flour. And recently now we have the high quality cassava peel meal. That is, they buy the byproduct from cassava, which is your peel. It's also grinded, it's also processed into animal feed. So you have this product, you can list them there. So your year one, what is the assumption you are making? Okay, say year one, we're going to make 200 million naira. You put it here. Your year two and all that. So it can have a projection. I did not include 2% increase, 3% increase based on inflation and all that. We do not have that kind of statistics in Nigeria on how inflation is going to rise through or go down, all that. For now, we are in a state of hyperinflation in the country. So while you have that, you can also use your discretion. You put in the figures, it's going to put in there. So but these assumptions, you are writing your business plan to people who are experts, who probably will know more than you do. So this is where you have reasonable assumptions. So don't put bogus figures that cannot be that are not achievable or that are not realistic. So good. So you have your total revenue here. So let's say you have a direct cost. What are direct costs? Direct costs are costs you incur that are directly related to the business. For instance, if you're manufacturing gari, for instance, your cost will be the cost of transportation of that cassava from that farm or farmland to the processing facility. Or direct cost will also be you are buying fuel. Okay, you're buying fuel to process, you transport fuel, then all those things that are around that makes what is the cost you incur to make that product or service. So now you now have operating expense. Of course, you will pay salaries, you pay your rent, you pay your utilities, you pay all of this transport. Okay, again, you can have that. So transport is in two ways. No transport that is related to that, or the transport you run as an organization. Maybe you can say you want to go and deliver that product to let's say Lagos from, let's say, Kano, and then you are going to do logistics. So that transport is also going to be here. Or other transport, say you have a business meeting as a CEO. So those are transport expenses that goes into your operating expenses. Your subscription and licenses, maybe you have DSTV license and subscription, the likes. So your raw materials, so you're buying raw materials. Maybe buying, some organizations buy raw materials in bulk, they pay in advance. Say you need your cassava and you want to pay upfront to farmers, then you pay them. So depreciation is very, very crucial in operating expenses. So now if you look at this place, once you put in there this your operating profit. So let me show you here now. You can look at this, you can see this area, E13 minus E26. This is E13. So your gross profit minus your total operating expenses here will give you your operating profit. That is what happens across board. So now you now have other expenses, which is now you've gotten a loan. You need to pay back the loan and the interest expenses. So this is where it comes in. It's minus again. If you are a company, if you register your business as a limited liability company, you are entitled to 30% taxation. And I think there is a law that says that 25 million naira, if you make 25 million naira then above in turnover per year, you're not entitled to pay tax. It's a new financial rule. You can check it out yourself. So thank you. So you have that profit after tax and all that. So you have those figures. So we go to the balance sheet. So this balance sheet is just talking about the financial position in terms of your liability and your assets. So for every company,